So, okay, so good morning. I'm going to just start. Good morning and welcome to our training. We'll be looking at Fibonacci trading today. So just like I was saying, Fibonacci is actually the name of an, I'm not spelling that correctly, an Italian mathematician, right? And he discovered a concept that there are patterns in life, right? There are patterns in life. If you go to images here and just look, you'd see that your hands, like the distance of your the palm. If you look at your palm, just look at your palm now. It's not random the way it is, right? If you pick up a petal, like a flower petal, it's not random. You know, there are patterns to these things. If I look at the petal, if based on using Fibonacci, just looking at one section of, just looking at the petal, you can tell how many it is without even actually having to count it, because life itself is all about Fibonacci patterns. So there are Fibonacci patterns everywhere. There's Fibonacci pattern, even in Picasso's art, right? In flowers, in life, in pineapple, in everything, right? So what it's actually called the Fibonacci golden ratio. So here's what happened. Now, this doesn't necessarily have anything to do. Explaining it like this doesn't necessarily show you what it is about, for example. With me, I want you to get an understanding of what you're using, right? Of what you're learning. Now, so what then happened is, okay, well, certain analysts started saying, okay, if Fibonacci is constant in life, even in random things, in numbers, in patterns, in the universe, actually, the way the Milky Way galaxy is designed, follows this Fibonacci sequence. And then we started looking, okay, if we apply this to the Forex market, because even though you look at the Forex market and it appears random, you look at it and it looks like, well, the market is just random, price deciding to go anywhere it wants to go. But when you start really, really looking at it and in terms of doing analysis on it, you see that it's not as random as you initially thought. There's actually pattern to it. So it was like, okay, will the Forex market, does the financial market also respect the Fibonacci golden ratio? Right? And so analysts started putting up, okay, let's apply this to the chart, let's try and then sure enough, we are able to find that it's that the Fibonacci sequence or the Fibonacci ratio actually applies to the financial market. So the Fibonacci sequence is something. Anyway, I'm not going to go into mathematics or anything. Let me just pull up a whiteboard. So the Fibonacci sequence itself is something like 1, 1, 1, 2, then 1, 3, 3, don't mind my drawing, 1. So like that. Now, what is then identified is the fact that there's a pattern in the market, there's a pattern in the numbers. You can tell, you can more or less predict, the sequence and what is going to follow and how it's going to happen. And so when this is applied to the Forex market, in terms of using it to figure out pullbacks, and it's applied in terms of way of figuring out the movement in the market. So the idea is this: we know something about the Forex market, and what do we know? Well, we know that the market does not move in a straight line. What I mean is, if price is going up, price don't just go up. Price don't go up like, in a straight line like this. If price wants to go up, it makes waves, right? So what we then look is, since we know that price moves in wave, but what we don't know is exactly where the wave would end. You can see that this wave is, the distance is different in each wave, but what is common is the fact that the price is always moving in waves. So when we apply Fibonacci, we try to figure out, okay, what are the possible areas, as long as the market is still trending, what are the possible areas where price could potentially, reverse and continue in the overall direction of the trend. And so we are trying to use it to figure out entries. So what we then do is, there's a Fibonacci tool. Obviously, don't worry, you don't have to do the mathematics. There's a tool in your MT4 application, whether you're on your mobile phone or your laptop. There's a tool you can use. There's a Fibonacci tool that you can just draw on your charts, and then you can see potential areas where markets could turn around from. And then what you could then be looking for is looking for opportunities around those regions. I hope you're following. Now, we're going to be going to the chart because all of this talking will probably not explain it. But now you have an idea of what we're looking for. we're looking to see, because we're trying to take advantage of the fact that we know that price is always moving in waves and price is always moving in, we're trying to figure out, okay, where does it bounce off? Where does it continue the trend? And then try and see if we can get that before. Remember, we make profit in the markets if we're able to figure out where price would go, and then we follow price, we start trading in the direction of price before price gets there, right? So the goal is to figure out entries. Okay, now let's use any chart. Now the concept works on every single chart, every time frame. It doesn't matter whether you're looking at the 1 hour chart or the daily chart or the weekly chart, or it doesn't matter the time frame you're looking at. The market is always moving in waves. So this is the daily chart for pound dollar. Price is always moving in wave. If we look at the 1 hour chart, even the 1 minute chart, you would also see that price is also moving in waves. Whether it's going up or it's coming down, price is moving in waves. Now, on your MT4, or maybe I should have done this on the MT4, because most of you will be using the MT4, but it's actually the same concept. It's easy for me to use this here because it's easy for me to make illustrations. MT4 is much harder for me to make illustrations for you. But on the MT4, if you go to indicator, if you're using the what do you call it, the desktop or the system version, you just go to indicator. On indicator, you click on go to insert. Then on insert, click on indicator, and then you should be able to add Fibonacci from there, right? You would also see it on your charts there. Okay, let me see if I can just quickly pull that up so that I can show you instead of just saying it. Now, if you're on your mobile phone, obviously I can't show you how to do it on your mobile phone. But if you just tap anywhere on your charts, the round circle would come out. What you want to do then is just select there's an F button. There's something that looks like an F button function, and then just scroll down. You would see Fibonacci retracement, right? Fibonacci retracement, Fibonacci extension, Fibonacci expansion. On the system, you just see it at insert. So let me just quickly open. I don't have my MT4 open here. I'm just going to try and quickly open it, and then I'll show you that. So let me just pause. Looking at. So irrespective of the time frame, irrespective of the currency pair, well, the Fibonacci level, the market is always moving in waves, and so we can apply Fibonacci sequence to the market. So here's the idea, right? Let me put the market. The market is always moving in what we call ABCD wave, right? So price would go from a point A. So let's say if price is going up, right, would go from a point A to a point B. So when the market moves up from point A to point B, we expect that at some point B can be anywhere, but wherever the market makes a point B, we expect the market to come back and make a point C before eventually going to a point D, right? So the market goes from point A to point B, and then we expect the market to retrace to a point C before we try to take the market, before going to a point D. So the idea is if price is trying to go from A to D, it usually would not move from A to D in a straight line. It will go from A to B, retrace, and then continue from C to D. Now, if I were to ask, if you know that this sequence is how the markets work, where is the best place to look to buy? Because you can see price is going up here. Where is the best point to be looking to buy from? Point A, point B, point D, or point C. So for A, B, C, or D, where is the best place to buy? So you can just type in A, B, C, or A, B, C, D, whichever. You don't have to. Okay, so Nicholas said C. Do we all agree with C? So market has gone from point A to point B. We expect that at some point the market will retrace. So instead of trying to chase the market, we look for where the market will make a point C so that we can then follow price to point D. So please mute your mics so that you don't disturb us. Mute your mics. Okay, so this is the idea. The market, so Fibonacci is all about reading the ABCD pattern. Now, if I go back to, if we look at any chart, you would also see that this is true for any chart. So let's look at this chart, for example. So this is the 1 hour chart for pound USD. And let's just start from anywhere we want to pick from. So let's start from this low price here. right? Look at where price is going, but how is it moving? From point A to point B to point C to point D. And then again. So the market is always making A, B, C, D cycle. So when it completes a cycle, as long as the trend is still intact, it will keep repeating. So A, B, C, D. Then once that cycle is completed, the new D becomes A, more or less, and then the cycle, the new C becomes A, and the D becomes B, and market continues. I don't know if you're following what I'm saying. So what I mean is, the price is moving in sequence, right? So price is moving from where's mine? So the price is moving from a point A to a point B, right? And then from a point B, it retraces to a point C before eventually completing at point D. So this will be A. So we'll have A, don't mind my writing, B, C, D. And then the cycle is complete. Now, once the cycle is complete, this C becomes what we start looking as A, and D becomes B. So we wait for the market to make a new C, and then we continue. So as long as the trend is staying bullish, we continue to look to trade this. Now, eventually at some point, the market will negate this and start making lower lows and lower highs, in which case this will become A, B, C, and D. And then we keep repeating the process up, down in that sequence. So we know this for a certain that the market is always moving in waves. And so we're trying to say, okay, can we figure out where these waves will pull back from? Now, there are, in trading, there are actually a couple of Fibonacci levels, especially to pay attention to, that comes with your chart. So the first one is, so Fib levels. I'm just going to write this as Fib levels, right? You have the 23.3, right? We have the 38.2. We have the 50. So the 50 is not actually a Fibonacci number. 50.0 is not a Fibonacci number, but it's just the midpoint. And what we find is sometimes the market actually respects the Fib level. So it's why it's added to your chart. And then we have the 61.8. And then you could also have the 78.6, right? This is not necessarily, it's not very common, but it's one I also pay attention to. So now what we do is, these are levels where very strong possibility the market is going to retrace from. Now, in most cases, in a decent trend, the market will usually retrace between the 38.2 and the 61.8 Fibonacci retracement levels. If the market makes a shallow retracement, it will just get to the 23.3, and when it makes a very deep retracement, it will get to like the 78.6 or the 81.1 Fib levels. Now, you don't have to calculate these numbers yourself. When you draw your Fibonacci, it will show you where those levels fall in. So these are the Fib levels. Let me just have them here. Let's push them to the side. And then, so let's drop them here. Now, let's look at this sequence, right? Now, this is a 1 hour chart, so we're going to probably see a lot of movement. So let's look at the 4 hour chart. Now, the concept is, it works on every single time frame, every single currency pair. Now, the question which I expect is, well, so how do we define point A? Remember, what you need to do is figure out point A and point B, then draw your Fibonacci retracement, and then wait for the market to give you a point C before trading it to a point D, right? I hope you got that. So what you want to do is identify point A and point B, and then draw your Fibonacci retracement. Use your Fibonacci tool to draw your Fibonacci retracement, and then figure out where point C is, and then trade it to point D, right? So let me go back and do an illustration again. So let's call this point A. Let's say this is A, right? I'm going to, this is A. Let me just copy this, paste, paste, paste. So we have A, right? So I'm going to edit this and make it B, make it bigger. And then let's make this C. make it bigger as well. Then let's make this Z. And let's make A bigger as well. So what we are trying to do first, now there are two scenarios. The market is in an uptrend, or the market is in a downtrend. Now, trading with Fibonacci Fibonacci is a trend trading strategy, right? So if the market is ranging, you probably not have any fun trading with Fibonacci because the market is not trending. So it is a system that works in a trending market. So what we are trying to do, I remember the market can trend in two directions. Is either the market is trending higher, so the market is bullish, making higher highs and higher lows, right? Or the market is bearish, making lower lows and lower highs. So irrespective of the type of trend, we can apply Fibonacci, right? So now here's the point. If price goes from a point A to point B, what we are trying to do first is identify this. So let's say price goes from point A to a point B, right? So we have from point A to point B. What we're going to then do is draw our Fibonacci and wait for where point C would fall in at. Now the question is, how do I figure out a point A or a point B? Now usually, there's no hard and fast rule in terms of where is the lowest price of all of those things. But now, if it's an uptrend, obviously A is going to be low and B is going to be higher, and C is going to be a retracement level, and D is also obviously going to be higher. If it's in a downtrend, the A is going to be higher, B is going to be lower, C will be the lower high, and D would be the lower low. Now, where do you draw your level from? Now, what you want to do is you need a candle that is higher than 2 candles to the left and 2 candles to the right, right? To identify your point A or even your point B, you need a candle that is, so in an uptrend. So let me just see if I can type this. So in an uptrend, so your point A is a candle that is lower than 2 candles to the left and right. Okay, so well, this is too big. So 2 candles, let's make this for 10. Okay, so a candle that is lower than 2 candles to the left or 2 candles to the right, this is an uptrend. Obviously, in the downtrend, it will be a candle that is higher than 2 candles to the left, 2 candles to the right. Now, let's look at this uptrend. Remember, this area here, the market is in an uptrend, right? Let's see how we could trade this uptrend. Now, in this area here, this is your point A. So let me bring our Fib numbers, no, not down. So let me just drag this down so I could use them. Okay, so now this would be our point A. Now, look at the candle I'm talking about, this candle. You can see that if I count 2 candles to the left, obviously it's a low price, like it is the lowest price I can see here. 2 candles to the left, this is the lowest point. 2 candles to the right, this candle is lower than 2 candles to the right. So this is my point A. Now I will keep moving. My point B will be the next candle. That is 2 candles to the left, 2 candles to the right as well. Now, if you keep going, you'd notice that, well, this is the next candle, right? You can see this one, for example, it is higher than this. So let me zoom in. It is higher than this one. The tip of this area is higher than this one, but well, it's also higher than this one, but I wouldn't want to consider that. So this is the clear area where it is higher than 2 candles to the left, 2 candles to the right. And what we'll then do is draw our Fibonacci. Now, it's the same thing you would do on your MT4. You just select your Fibonacci 2, draw it from point A, right, to point B. So this is our point B, right? So you draw from point A to point B, and then the market will show you all the Fibonacci levels, right? Now, my Fibonacci here is a little bit funny, so I'm just going to take away some of them. So we can just see what it should look like, right? So from point A to point B, and then the market will retrace. Now, in this case, the market did a shallow retracement, and it only came as low as the 23.6, right? So point A to point B. I don't know, these candles here are blocking this, but if you look here, this is the 23.6. So let me zoom in. This 23.6, this is 32, 38.2, the 50, the 61.8, and the 78.6, right? So as long as the market pulls back down and does not go lower than point A, there's a very strong possibility that the price will continue to go higher. So I have a rule, as long as price does not take out the A, price is likely going to go your way, right? So price went from point A to point B and retraced. You can see in this particular case, it did a shallow retracement, retraced to the 23.6 level. Now, you can see 0.23.6, 0.38. It's in percentage. So this is the 23% retracement. This is the 38% retracement, the 50% retracement, the 61.8 retracement, and so on. So now, when the market goes from point A to point B, then and forms a point C, in this particular case, we had the point C from here, the retracement was here. We are likely going to see price go to point D. Now, the question is, how far is price going to go from point C? So this will be our point C in this particular case. Where should we be looking to take profits? Well, ideally, when you've drawn your Fibonacci level using the Fibonacci tool, then, so I'm going to, let me just leave that there. You go, remember, we use the Fibonacci retracements to draw our Fibonacci, to find our entry, right? Where the market could potentially continue to bounce. However, we use the Fibonacci extension, right? So if it is on the, if it's on your MT4, you would see, where is the Fibonacci extension? Here. Trend, I think that's it. So you go from point A to point B, and then you figure out point C. So what I'm going to do is, this one will be a little bit confusing. I'm going to do this using the normal MT4. So let me share this one instead. Let's use this one instead. So now we're on the MT4, the one you're familiar with. This is, remember I said, it doesn't matter the currency pair, it doesn't matter the time frame, right? So let's look at the daily chart, right? So here we can see a clear trend, uptrend during this side, downtrend during this area, right? So let's start from the beginning of this downtrend, of this uptrend. So this is where the uptrend started, right? So if I were to zoom in, right? We are looking for, remember, this would be this is lowest price, so this is our point A. We're looking for the next obvious high, right? The next candle, that is 2 candles to the right, 2 candles to the left, higher. Now, you have to, obviously, there's no hard and fast rule, right? Sometimes you have to filter out through levels. So let's say while this is playing out, so let's say, and I'm going to adjust this here. While this is playing out, this might be considered a level here, because you can see that this candle is lower than 2 candles to the left, is higher than 2 candles to the left, 2 candles to the right. However, there was no follow through. So here, this is 2 candles to the left, 2 candles to the right, clearly. So this is our point A, this is our point B. So what we then do is bring our Fibonacci retracement, go from point A to point B. So I'm just click and drag, I'm just doing click and drag, go from point A to point B. And then we would allow the market decide where point C is. So the market has made point A to point B. Next, we allow the market decide where point C would be. And in most cases, it would be from one of these levels. Now look at, remember I said the most popular Fib levels are the 38.2, the 50.0, and the 61.8 level. So personally, I like to see the market come to a 61.8 Fibonacci retracement level before looking to continue the trend, right? Now, there are 2 reasons why. Remember I said something. If the market does not take out your A, then there is a strong possibility the price would go your way. Now, if this is A and this is B, right? If the market pulls back to 23.6 and continues, ideally, what will negate this Fibonacci? Is it not if the price comes down and take out A? So that means if I want to ideally place my stop loss, I should be placing it below A. Now you can see the distance between 23.6 and our stop loss is going to be huge, right? However, if the market pulls back to a 61.8 retracement, even though it's big, you know, we now have a reduced stop loss, we are risking lesser, and then our potential reward is also higher, right? So now look at this, right? Remember, this is just a chart I picked. Market came to the 61.8. See how it struggled. It did a bullish spin back from here. It also came back. You see how the market failed to go below 61.8. Now, I'm not saying it never happens. Sometimes it bounced up from 50.0. In many cases, it also does that from 38.2 level. But once we figured A, B, and now we have a C, what we will then do is delete this Fibonacci extension, Fibonacci retracement, and then add the Fibonacci expansion. So I go to insert, go to Fibonacci, and then add Fibonacci expansion. So I'll still go from point A. Remember, we already know point A. Go to point B. Now, look at this. If you see this line, let me make it thicker. Let me make this line thicker so that you can all see it better. I think this should be, so you can all see this now. So this is A, B. Now we'll extend this to come to where C is, right? So we have A, B, and C. Now, once we have Fibonacci, well, we have A, B, and we see, we draw this. What we are trying to do is figure out, remember, we have used Fibonacci retracement to figure out entry, at least potential entry. Now we're trying to figure out, okay, where do we exit for profit? Well, the Fibonacci extension or the Fibonacci expansion, you know, when we've drawn A, B, and C, it's going to give us a D. Now you have a couple of levels, right? I've adjusted my own to have a 100% level, right? So this is A, B, this is the area I'm going to be targeting. So if you look at this section here, you'll see FE. This is, your chart would not show this, obviously. Your chart would show 100 or something like that. So I edited this myself, right? So to have this level on your chart, okay, let me just show you. If I go to property and go to levels, Fibo levels, you would see that I have, so 1. So if you want to adjust this, you can obviously make a screenshot. You can add this to your chart, right? So I have a 0. The level is 0.16, right? Then a 1, and then 1.618, right? So these are the 3 levels I have on my chart. You can obviously go to your own, even if it's on your mobile phone, you can edit it and have these levels. So in the description, you can put this, whatever you like. But the important thing is have the levels 0.16, 1, and 1.168. Right? Now, once you add that to your chart, you'd also have these same levels. Now, the reasons I have these 3 levels is, look at this. So for example, in cases where the market pulls back low, so low, right? So, you know, let's say it's 81.8 Fib level. I like to take profits at, you know, I would like to close out on my profits before price even gets to, how do I explain this? There's also a strong possibility price could pull back down. But okay, here's the thing. Let's not get confused. Just have those levels on your chart and only pay attention to the Fib 100%. That's the one that is the 1.0, right? So in this case here, you can see that price went from point A to point B. We draw our Fib level, our Fib expansion from point A, B, and C, and then we're looking to take profits at point D, right? So A, B, we have C, the market gives us a C, and we start taking our trades and try to take it to point D. Now, here's the thing. The question is, does it mean that once we get to the 618, I start buying or start selling? No. Remember, I always say that everything I teach you or talk about, they're not in isolation, right? Everything is not in isolation. So when I talk about candlestick patterns or trend line or candle trend line, you'd have to combine everything together to make a dynamic trading system, right? So because there's nothing saying, we don't know for a fact that price will stop at the 50.0 or the 38.2 or the 61.8. We don't know exactly where the price would retrace from. We don't even know if it's going to continue going down and turn to a downtrend or continue the downtrend. So we need some sort of confirmation. So this is where you now start adding, you know, we've discussed a lot of confirmation, whether it's counter trend line trading, whether it's price action system. trading. But once you have a confirmation, remember, the direction that you're looking for price to go in this case is bullish. You have an area where you're looking for bullish sign or bullish opportunity. And then once you find a strong enough bullish opportunity that you are okay with, then you can look to take the trade. You have a viable place to place your stop loss or that negates your trade, and then you trade the trend. So look at in this case, we have from the 618. So I'm going to just draw my Fibonacci numbers again so that you can, we can see it. So I'm going to let me change this so that they look different. Yellow. Let's make this white. So the white ones are the Fibonacci retracements. This yellow one is the Fibonacci expansion. So we have from point A to point B, and the market retraced. So price found support at the 61.8. We had a bearish engulfing, so a bearish pin bar here. We also have what am I saying? A bullish pin bar here and a bullish engulfing from this level of support. Now, you would not trade this exactly the way you trade your bearish pin bar or your bullish pin bar in isolation. Remember, your decision was made based on Fibonacci, right? And the negation of this trade is, going to be if price goes below the A. Now, you might not necessarily be willing to risk all that much. Sometimes what I do is I place my stop loss. If I'm being aggressive. If I'm being conservative, it will be below A. If I'm being aggressive, it will be below the 81.6 Fibonacci level. So if I decide to enter the market here, let's say because of this pin bar, or maybe because of this engulfing candle, I would place my stop loss down here. Now, I already know where my target would be because of Fibonacci expansion. So you can see that in this particular situation, for example, so I'm going to delete this. No. I'm going to delete this one. So in this particular situation here, we have our A, we have our B, we have our C, which is where we are looking to take profit from, and we now have our D. Remember, all of these things has not happened at the time. We'll be placing our stop loss based on our Fibonacci expansion. Let's say we are placing our stop loss below the A, so our stop loss would be somewhere like here, and our target is up here. Right? So this will be our target. Now, in this case, once this happens, once we've decided to take the trade, well, we let the market run. So you can see how the price ran, if you could even pull back here. But eventually, what happened? Price got to our target. When it got to our target, you could see how the market reacted to that level. So you see why I have this level on my charts. You see, when price got to this area, you can see it reacted. Right, so in some cases the market may continue going down, and so maybe you might close partial profits here, maybe adjust your stop loss to break even, so that in case it happens, you're already in profit, right? But in most cases, price would probably tend to complete the Fibonacci, and here's the beautiful thing: once it is completed, well, you continue the same thing. So I like to say, when it comes to trading, my trading language is eat, sleep, take profits, repeat. And that's the beautiful thing about this. Once it's about repeating the same thing, getting so good at it, mastering it, and then repeating the same thing over and over again. So now we've gone from point A to point B, we found C, and then we've completed this Fibonacci sequence. So this particular Fibonacci is completed. What then happens? Well, there's always Fibonacci, right? So if I was trading this A, B, C, D, this will now be my A, this will be my B, and then I'll look for a C. Now, here's the thing. There's also a Fib level here, A, B, C, and then you have a D. So this is A, this is B, this is C, this is wherever D would be based on the expansion. But if you were trading from here, A, B, you'll be taking profits here. If you did not take trade from there and you see the market, because it's like a square cube that is put inside another square cube, inside another square cube, inside another square cube, and it keeps getting bigger. That's how the market works. Even if we zoom out to the weekly charts, you'll still see that the price moves, it has the same pattern: high, low, high, low, high, low, low, high, low, high, low, high, right? So irrespective of the system, irrespective of the time frame you're looking at, the same concept is still applied. So where's that place now? Let me zoom out. Have I passed it? Maybe have I deleted? Anyway, if I can't find it, I'll just use another one. Where did I? Let's zoom in here. Okay, but so far so good. I hope we understand the idea, right? We are trying to figure out entry using Fib. Now we've shown an example using a bullish market, like when the market is going up. It is also the same thing in a bearish market when price is coming down. So let's take this for example. This would be our A here, right? So this would be our let's push this up. So this would be our A. This tip here is our A. This would be our B. And then we're trying to look for C and then see where our D should come at, right? So now what we do is we have this, we bring up our Fibonacci 2. We draw our level from point A to point B. And then we figure out where point C will come from. Now just look at this. Where did the market pull back from? The 38.2. Do you understand? The market is not coincident. The market pulled back from the 38.2. Why is it pulling back from the Fib level? In the other one, we saw that the market pulled back from the 61.8. In this case, cleanly the market pulled back from the 58, the 38.2. And let's see where we should have been taking profits from. Well, we'll bring out our Fib expansion too. No, that's retracement. Let's go to insert. We go to Fibonacci, go to expansion. We go from point A to point B. Try to figure out a point C. And where is A, B, C? So this would be our C. And our D is supposed to be at the 100%, right? And this is our D. Did the market complete the cycle? Yes, it did. Right? The market went A, B, C, D. So we're taking profits here and we're good, right? And you can see how the market bounced off from the Fib level. We're able to take the market to another, to our expansion level, and we're good. Now, in between all of this, right? In between all of these trends, there are smaller trends in the smaller time frame. So even if you're looking at the 15-minute chart, the 1-hour chart, well, you still see the market, moving in waves. And you can still try and apply your Fibonacci to it if that is the kind of market or the kind of time frame you prefer to trade. Obviously, the bigger the time frame, the more quality the trade. In general, the bigger the time frame, the more quality the signal, right? Because a 1-hour chart could be going uptrend and then start going downtrend and start going uptrend. So you could be caught, you'll be caught in between all of this randomness if you're not careful, right? But sure, you could definitely apply this. It is, I also apply it to smaller time frames if I'm looking for quick, some, let's say, short-term opportunities or things like that. Right. So now, once you've completed the cycle, you're done with that trade. You're out of the market, so you're done with that trade, and then you look for another opportunity. So now, if this were me, for example, well, I'll be looking for this. So we've done A, B, C, D. Now this would be our A. Where would our B be? Remember, let me see if I can undo that. So question time. We have A, B, C, and this is where we take profits, right? Now, this is going to be our A, obviously. We say the C now becomes our A. Where is our B going to be? Who can tell me? Where is the B supposed to be? Where are we supposed to be looking at? Any idea? Anyway, if this was a physical class, it would have been easy to ask. So remember, we said A or B or whatever, either the A or the B has to be in a bearish market, in a bullish market. In a bearish market, it has to be a candle that is lower than 2 candles before, 2 candles after. So in this case, we have an A. Our B would be the next candle, that is 2 to 3 candles lower than the candles to the left or to the right. So in this case, we'll have our new A. Our B would be this one, because you can see this candle is clearly 3 candles, not this one, this one. So if I'm drawing my Fibonacci, my next Fibonacci will be like this, right? A, B, and then I'm looking for where the market will retrace. Now this, well, I'm looking for where the market will pull back from. And in this case, see what happened. The market went out and took out the A, right? So the market kept going up. It did not pull back anywhere and took out the A. So what will happen is there will be no trade for me because there was no confirmation here, except from here. Now, even if I'm trading this, it will not be because of Fibonacci because it has negated it. It's not supposed to take out the A, right? But doesn't mean I cannot find another system to maybe look for trading this. However, if it's purely based on Fibonacci, there will be no trade here, right? So A, B, well, C took out the A, hence no trade. So we move forward. In between here too, if this take out now, naturally, if the market takes out this, I will draw my fib like this, A, B, looking for where I will find the C. And now let's do that. Let me not filter the trades. Now, one thing you want to know is it doesn't mean that everything I trade is purely based on Fibonacci. The importance of Fibonacci, or what I use it for, is when I do use it, is to try and figure out possible retracement. Now, this is something you would want to use, test out, try out, and try and figure out. You want to back test it and see if the market actually does, how the market reacts to this and how you can trade that, what time frame is best for you. So I would have drawn this personally. This would have been A, B. If the market pulls back from this area, this is enough confirmation, I'll be trading this. Definitely, I'll be looking to trade this. And then once we have this, I would draw my Fibonacci expansion. I'm going to, let me delete that one so I can add it again. Add my Fibonacci expansion from A to B and connect it to C and figure out where D is. So we have AB. I'll connect this to C and then figure out where D is. Now notice this. Remember I said something, when the market makes a very deep retracement and I'm looking and I actually decide and I find confirmation and I'm actually buying, I usually would want to take part of my profits at this first Fibonacci entry, Fibonacci expansion level here. So you can see, the market went A, B, C. If I started buying because of this pin bar, I'd have been able to capture how many pips is that from this area, from this point to this point is already 60, 62, 63 pips, right? And what I would have done is close part of the position, adjust my stop loss. So my stop loss would have been down here. Adjust my stop loss to be break even. So even if the market comes down, well, I'd have already made profit on this particular trade, right? Now, it is not, obviously, the Fibonacci is not always going to work. Sometimes the market will slice through levels. Sometimes the market would not respect certain levels and change direction or change trend. Nothing works indefinitely. There's no holy grail in trading. If I'm looking at this now, I can tell there's fib level A, B, C, D. Then once that's complete, A, B, C, D. Let's draw that. Let's see. So if I'm going to draw this will be A to B. Market pulled back from look at the 50%. I don't know if you can see it clearly. I don't know if you can see clearly. So A, B. So B is the lowest price, 2 candles to the left. A, B, it pulled back on the 50. And our D would be the expansion. Fibonacci expansion. And let's see where we should be taking profits from. 100%. And that one was a profitable trade. Now, once that one is done, once we're done with that trade, I'll look to the next one. Once that cycle is complete, well, this will be my new A up here. My new B will be the next low price after where our profit target is. And the next one is down here. The next one is down here. So A, B, I'll look for where the market pulls back. You can see in this case, we have A, B, pulled back at the 618, right? And so I'll draw my expansion to try and figure out where I take profits. So this would be our C, and our D would be down here. And where are we taking profits? 100% level. You can see how this one went nicely. A, B, C, D, we take all our profits here. And then we continue the cycle. As long as the market does not take out previous A, we'll keep looking for sell opportunities. If the market reverse, you can see here, the market took out this area here. So what that means is, well, I'll start looking for buy opportunities. This will be my A. I'll see where I can get my next B. This will be my B. And I'll just draw my level. So this will be A, B, and then this will be C. Now, there's something you also need to know is sometimes the market will do something like this. So the market goes from point A to point B. It comes to point, it pulls back. So this is a pullback. You can see it pulled back to the 23.6 and went above A. It even came back down to come and find another fib level. So this is it. You would sometimes find this happen. It actually happens quite a lot. Usually, when the market, this is the reason why I prefer to look for entries around the 38 to the 61.8. So 38.2 to the 61.8, because when the market now starts trending, not only is my risk at least smaller, but when the market starts moving in my direction, I should be able to protect my profits as price is moving in my way. Right. So I hope, first of all, I hope I'm not, I hope we're following, right? Now look at this. Let's look at this, for example. Let's zoom out. Okay, well, the market did not play out this one quite nicely. But let's see this. Let's add a fib expansion. Let's see if we're able to. So this will be A. No. Let's add our fib expansion. I hope we are getting the concept. So this will be A, and where is our B? Our B is up here. And then in this case, our C is actually down here, right? Because first of all, okay, when we draw this, initially the C would be here, and we'll be looking to take profits at that point up there. However, you can see, I hope you're getting what I'm trying to say, because there are too many lines here. So we have A, B, and we draw our Fibonacci. The market initially retraced. Remember, because we're looking at this thing in hindsight, that means the market has already happened. But if I take it to this side, for example, so that we can imagine what is happening, as if it was happening at the moment. Once the market did this, I would draw my fib level. And then if the market pulls back to the 23.6, if I want to trade it, this will be my C. However, when the market comes down lower and takes this out, I would have to adjust my C. And notice, if I'm adjusting my C, my expansion is also adjusting. So this is going to be my new C, right? Obviously, my stop loss will be below here if I was trading this. And then I'm looking to trade this. Now, if the market moves all the way in my favor like this, I'll probably protect some profit. But let's just assume I don't, and the market comes back down. This is lower than this. So this is going to be my new level. The reason is, you notice that the lower it is, the more our expansion comes closer, right? So if I'm buying from here, that means I should be looking to take profits at 100% here. So if let's say so this is where I might have 3 positions. I might have 1 position here where I might be looking to take profits higher. But the moment it makes this one, I'll be looking to take all my profits around this area here. So A, B, C, well, the market completed this Fibonacci level because we went from A, B, C to D. And then once that cycle is complete, I will then be looking to draw my A, B, C if we maintained, if we're able to respect this level or continue to trend. So the moment we take out a previous A, and then that Fibonacci level is invalidated, right? Now we've actually discussed a lot of things: Fibonacci, A, B, C, lowest price, highest price. So just give me your feedback. First of all, I hope I have been able to convince you and not confuse you. I hope you don't have to understand every single bit of it, but you just need to be able to grab the concept. Now it's with practice that you get better. Obviously, you can ask me questions. If you get stuck at some point, just send me a message on WhatsApp or something. But I hope you get the idea, and I hope it makes sense. Okay. Yeah. Oh, okay. Chinedu, you say it's clear. I hope it's clear for everybody. Is it clear for everybody? Now, obviously, oh, nice, nice. Seems I did a good job explaining. Okay, okay. Fibonacci is actually a very powerful trading, what I call it, strategy, in terms of figuring entries in a trending market. It works best in a trending market, mind you. It works best in a trending market. If the market is trending, then you're going to have fun, at least to some extent, trading this. Remember, all your trades will not be profitable, but that's not the goal. I'm not trading to be perfect. I'm trading to be profitable. So all your trades will not be a win, but the whole idea is you want to win a lot more, a lot quality more than you lose. And this is, the idea is simplifying it. If you trade this, you already have an idea of entry, exit, right? So if you can figure out the trend, then you can start figuring, okay, entry, exit, and you can play along with that system. And then if you master, it's all about mastery, right? The reasons I like to play, so you guys should try and come early for the trainings. The reason I like to play some videos is just to get us up into speed. Even till tomorrow, I still need to get motivated in terms of I need to keep my head in the game. I need to be focused. You don't get to the point where you're now Mr. Know-it-all and you don't, the market is not your mate. So, but it's practice. If you're done learning and you don't practice, well, you'll never be good at it. And in reality, you can't really learn on a demo account, right? You don't really get the whole. It's like learning how to drive, but doing that with a simulation in a room. Well, you would understand the entire concept of driving. You know how to change gear if it's automatic. You know how to put it in drive and all. But you don't actually know how to drive until you actually drive in the real world, with other vehicles around you, with trailer beside you, with people crossing the road. That is where you now say you are a driver. But you can learn exactly the concept of driving in a simulator, but you have to actually drive. It's actually the same thing with trading. The demo is a simulator, enable you to, so you're learning how to draw Fibonacci, learning how to draw expansion, all of those things, but actually learning how to trade, you need to trade live. Okay, everybody. Everybody seems to grab the concept of what we talked. I think we're running, if we're not, we're out of time already. We're 18 minutes past our time. And I have another class by 2 p.m., although that is physical class. So I need to rest, probably have lunch, and then continue. But the whole idea is make sure that if you're not in my trading room, make sure that you do everything you can to join in my trading room, right? And so we could trade together more or less. You could get some more in-depth knowledge in trading, look for the market opportunity. So you'd see me trade, at least the way I look for, scout the market, and look at the markets for opportunities. We'll discuss them together. A couple of the trades we took earlier this week, are sitting in a lot of profits. Some are not, but most of them are sitting in profits. And then the best way to learn is to find somebody who already knows how to do that and you want to learn, and then learn from them. Okay, thank you, everyone. I hope you enjoyed the class. I would hope to see you in the next class on time. Until then, do have a nice day, have a wonderful weekend. Go out, make the best of the rest of your day, be kind to everyone, and make some tips. So I'll see you in the next training.